Hey there traders, welcome back for episode 10 from the StockBandit.tv. I'm sure glad that you stopped by. So one thing I get asked quite frequently by traders, and particularly newer traders, is whether it's better to trade stocks or options. And so we're going to talk about that in this video. And there really is no standard answer here, because really it all depends. It's going to depend on the amount of your risk capital. It depends on your time frame. It depends on the move that you're looking to catch, and it depends on the stock that you're watching. And so let's spend a little bit of time here talking about this, and I'll show you exactly what I mean. You know, formulating a trading plan definitely involves choosing which instruments you want to trade. Do you want to trade stocks? Do you want to trade options or futures? And so I hope that before you put your money at risk at all, that you're going to make that decision one way or the other. Now, when it comes to options, there are definitely some pros and cons. The biggest benefit is the leverage that they offer, because they do let you control more stock with less money. The trader with a very small account might almost have to trade options in order to bring in sizable account gains, or just go with very long holding periods, since transaction costs can really chip away at a small account so quickly. Another benefit is the ability to limit risk to a specific dollar amount, since you can't lose more than the premium that you pay for an option. And that's really nice if you want to roll the dice on a news announcement like earnings or something like that, whereas that's not something that you can do with the shares, since they can expose you to tremendous risk in that type of situation. Now, there are definitely some drawbacks to trading options as well. One is that not all options are liquid, meaning you'll find a huge discrepancy between the liquidity of the stock and the liquidity of the option, and you've got to always consider that because the bid-ask spread can be very significant in a lot of options, and so that means it translates into more slippage than you'd see when you're trading the stock, whereas the bid-ask spread might be just a few pennies in the actual shares. And so let me show you a couple of examples. Let's say you're trading options on Qs, or you're trading options on spiders. Now, those are going to be extremely liquid option contracts, meaning there's tons of buyers and tons of sellers at each level, and it's very easy to get in and out of those trades, and I'll show you that here in a moment. But let's say that you take a look at a stock like CPNO. This is one that's on the move today. It's breaking out nice base. I actually pointed out to the premium video last night, but this is a stock that's really only traded a little over 400,000 shares today so far. We're right here near the closing bell, and yet this stock is not going to be anywhere close to as liquid as the others when it comes to the underlying options. So let me show you exactly what I mean by that. I've moved over to show you the options on spiders. And here we go. Just for the February contract, spiders are trading at 83.73. So taking a look at the 83 February calls and puts, look at the volume in these. Today, we had 35,000 and change in volume. We had 14,000 in volume on calls and puts here. And so those are extremely liquid. Here, let's take a look at the Qs. And here we go again, right here, these at the money calls, over 41,000 contracts traded today. At the money puts, over 20,000 contracts traded today. But let's take a look at CPNO. That's the stock that I pointed out to you just a moment ago. Look at the volume today, 103 contracts, 20 contracts. And so then you start to compare the bid-ask spread. I want you to take a look at this. Look at this 85-cent bid by a $1.10 ask. Look at how wide that spread is right there. And then let's flip back to the Qs, and you've got penny spreads here. And so that is a huge thing when you start to consider options and liquidity as compared to the actual shares of stock, whereas the Qs are bid and ask the shares by a penny apart, and then CPNO also a penny apart in the actual shares. And so when you start to weigh whether or not you want the shares or you want the options, that's something that you've got to consider. Now, another thing to consider, I'm going to flip back to the chart here, is the leverage that goes into trading. And that's to say that you can lose money faster with options. You can also make it faster, but you can also lose it faster without a huge move in the underlying stock. And finally, there is the time aspect of options in that each option contract has an expiration date. So that means that there is some time value which erodes as that expiration date begins to approach. And so trading options requires being correct not only with the direction that you're choosing, but also with the timing. Essentially, you could hold XYZ stock for a month and maybe it doesn't move at all, but you're not going to lose any money. Your value is still where it was a month ago if the stock went absolutely sideways. On the other side, the options will likely decline in value if that stock goes nowhere in a month because that time value is starting to erode. So there definitely are some things to consider which only you are able to decide on. Personally, I like trading stocks and I do it for a few reasons which I'll mention in another video, but trading options can be a good thing if you find it suitable to your personality and your trading plan. So think about your account size, think about your time frame, the moves that you're looking to catch, and think about the stocks that you're looking to trade and whether or not options are liquid in those as well. Consider your situation for each of those angles and then decide whether or not you're better off trading the shares versus the options in that stock for your next trade. Thank you for watching and thank you for subscribing to the videos. I'll see you soon with another video, but until then, trade like a bandit.